Hello, ladies and gentlemen, and welcome to the Strategy of the Week for Friday, February the 28th. My name is Dan Misch. I'm the Director of the Retirement Services Department at VectorVest, and I'm happy to take you through this week's presentation, which we have titled Hunting Income in VectorVest: How to Analyze and Select the Best Dividend-Paying Stocks. As we stated in the views tonight, we know the number one goal for retirees is to get as much income as they can in retirement and live the lifestyle that they always dreamed. And one of the ways we focus on that income stream for you from our Retirement Services Department is through the regular collection of dividends. Now, dividends, of course, are the cash distributions that many companies pay out regularly to shareholders from their earnings. These dividends send a clear and powerful message about future prospects and performance. A company's willingness and ability to pay steady dividends over time and its power to increase them provide very good clues about its fundamentals. Certainly one of the richest men of his time has a famous quote that says, "The only thing that gives me pleasure is to see my dividend coming in." That was John D Rockefeller. And we agree with Mr. Rockefeller. And that's why we have several different dividend indicators you can use inside the VectorVest program. The first one is, of course, the DIV, which is just the annual dividend paid, and we express that as a dollar amount. We also have the DY, which is the dividend yield, and that is expressed as an annual percentage. And then the proprietary indicators for dividend analysis are the DS, which is the dividend safety, DG, which is the dividend growth, and our dividend vector of the yield, safety, and growth, all wrapped into one indicator called the YSG. So now let's move over into the program and see how we can use these to help us find the best dividend stocks. It is just after 1:30 on Friday afternoon when I'm doing this recording. So right from the home page, I'm going to click on the Viewers tab, and we'll just open up the stock viewer. And I have this set to show me the first 25 stocks we have in our total database of almost 8,200. And right now these are going to be ranked by VST descending. So we have all of our normal VectorVest indicators, and as you scroll over to the right in this large spreadsheet, we do have those 5 columns for analyzing the dividend, beginning with the overall dividend paid. So as of right now, our top stock as ranked by VST is symbol SILC. That pays an annual dividend of 55 cents. Compared to the stock's price, that gives you a dividend yield of 0.77 and a dividend safety rating of 90. Now again, the dividend safety is proprietary to VectorVest, and that is the assurance that that company is going to be able to pay the dividend that they have declared. And it's also assurance that these dividends will be paid at current or higher rates for the foreseeable future. Now this moves on a scale from 0 to 99, so a dividend safety rating of 90 for SILC is excellent. Typically, when we see dividend safety values above 75, they will also have a higher relative safety and also a good high earnings yield. Next to DS, we do have DG, which again stands for the dividend growth rate. And what we're looking at here is the forecasted annual growth rate of the company's dividend based on their historical payments and that dividend predictability. Now, this dividend growth is a very important look at a company's financial performance. And it also provides some insight into the board's outlook on that company's ability to increase their earnings. So again, sticking with SILC having a dividend growth rate, that is certainly above the average for what we have overall in the VectorVest database, and it bodes well for them. And this final indicator here is YSG, which does take into account the dividend yield, dividend safety, and dividend growth, all into one vector cast on the same 0 to 2 scale as the other vector we use with VST and some of our other market timers we use. This stock has a YSG of 1.15, which is good. It's up above 1. And these stocks with the highest YSG that you can find are the ones to buy for well above average current income and long-term growth. And so right here, just in the stock viewer, we have a lot of analysis we can do to determine which stocks are the ones we want to use. And we can look at just these 5 indicators here. We also want to make sure that we do have good earnings per share or earnings yield from that company. And again, that's just getting into the assurance that they are going to not only pay you the dividend, but continue to pay it going forward, and hopefully at a higher rate with some growth. So all of these indicators can be looked at on a graph as well. If I right-click on the stock and choose View Stock Graph, I have this set right now to look at a 1-year graph of SILC. The price of the stock is on the top graph, and down below we have the earnings per share, which from VectorVest is a forecasted earnings per share. So you can see as their earnings per share continues to go up and that stock price continues to go up, we would anticipate that they'll be able to pay out some more of that earnings to the shareholders in the form of a dividend, which you can plot the dividend on a graph. You can plot the dividend yield, and even the dividend safety, dividend growth, and yield safety and growth vector can be plotted. If they originally come up as a line graph as these did, simply right-click on any of the indicators over to the right and change it to an area graph, and it will fill it in. And these dividends that you'll receive are cash dividends. That's the most common form of dividend and the most coveted type by investors who are looking for income from their investment. And broadly speaking, dividends have been a huge component of the stock market's total return over the last decade or so. The conclusion of this analysis is that investors are wise to pay attention to the importance of dividends. And so while you can do it right here in the stock viewer, and you can sort by any of these columns, as an example, if you were just looking for the stocks with the greatest dividend safety in our total database, if I click on the letters DS, it will resort the entire 8,177 stocks we have by DS. Again, I have it set just to return the top 25 right now. And you'd see that Advanced Auto Parts, AAP, is right up at the top of the list. And that has a dividend safety of 99, along with a whole bunch of other ones down below there. So even just sorting and clicking by these different headers, you're still going to have a whole lot of time analyzing stocks. And so what we want to do is show you how to use some of these indicators as filters and parameters to get you to a more manageable list of stocks that you can select from. And for that, we'll move over into the Unisearch tool. All of our searches that are pre-built are listed over to the left. And for tonight's demonstration, I'm going to stick right where I work in the Searches Retirement group and show you how just a few of these are already doing all the work for you. I'll begin down here with one called Optionable 2x4s. This search has as its very first parameter that the dividend paid must be greater than or equal to $2. Again, that's on an annual basis. On top of that, the dividend yield must equate to 4% annually. So all of the stocks that have that going for it are then going to be sorted by their VST plus YSG. So again, using those two vectors together, we're going to bring to the top of the list the stocks with the best chance for capital appreciation and the best chance for that income. Another one here is High Yield 2x10s, which is very similar, looking for that $2 annual dividend. But we've really cranked up the dividend yield, and now this is looking for those 10% dividend yields. These stocks, again, will be sorted by their VST plus YSG. The second one in the list here is called Don's Dividend Dandies. And it has as part of its parameters right here in the middle that the stock dividend yield must have a delta or a rate of change over the last 13 weeks that's greater than 10%. So this is going to find stocks that have a dividend yield that's increasing. And on top of that, these stocks will be sorted by the dividend yield multiplied by the earnings yield. And all you have to do is click on the green Run Search button, and the system will do all the work for you. And down below, when we get a list of stocks, we will have a column listing that 13-week dividend yield delta, as well as the dividend yield times earnings yield. And also from this list, you can do all of the analysis you can do right from the stock viewer as well, looking at those dividend parameters and columns. Now, one of our favorites we use here in retirement services is what's called high VST plus YSG stocks. And we love it for the very obvious reason of it combines a stock with a VST of at least 1 with a stock with a yield, safety, and growth vector of at least 1. On top of that, it has a good relative safety at 1.25 and a GRT, which is the earnings growth rate, of at least 10 for the year. And you know how important those growing earnings are to us collecting more dividends. So all the stocks that meet those parameters are then going to be sorted by VST plus YSG. And running the search, you're going to see some very familiar names down here. We have Vodafone, Novo Nordisk, Curtiss-Wright, Helmerich & Payne, and on down the line. But what I want to show you is the graphs of these stocks. VOD is obviously still charging forward, hitting a new 52-week high, and down below you can see that earnings per share is starting to wane a bit, but is still up nice and high. Novo Nordisk telling a very similar story. SHPG, Curtiss-Wright with just a beautiful looking graph, and we can keep going down through the line. HP is one that has shown up continually for us and continues to do very well. And you can toggle on by clicking the dividends button on the graph. Anytime you see an X, that was the X dividend date when you needed to own the shares of stock. And of course the P represents the payout dates as these stocks have paid you. So a lot of what we have in Search's retirement revolves around either having parameters looking for dividends or the sort of that search looking for dividends, or sometimes we combine the both of those together. Now, as these companies pay the dividends to you, you're going to have a choice as to what to do with that. If you are already in the retirement mindset and need the income from them, well then take it and live that lifestyle you've always hoped for and manage your accounts accordingly. The real importance of dividends to you as an investor lies in your ability to reinvest them, usually without cost, into that stock. And the easiest way to do that is to do it by using DRIPs, or dividend reinvestment plans. And just like the graphic shows, the companies are going to pay you cash, and you are going to take that cash and then use it to reinvest into the company and purchase more shares. Now, these are very inexpensive plans and sometimes even free of charge. You can do them directly with the company, or you can set it up through some brokerage accounts. And there are hundreds and hundreds of companies out there that provide this program. Now, when we're investing, everyone's playing by the same rules. There are 3 tools that we have at our disposal to help us build some wealth. We have the cash that we invest, we have the growth rate on that investment, and we have the ability to reinvest dividends that the investments generate. And this next graph will show us just how powerful that compounding dividend reinvestment can be. So along the bottom line, we have 480 months, or 40 years of time frame. And this graph is assuming that you could take $600 per month, roughly $20 per day, and invest it. And if you did that, you would be on the blue line at the bottom of this graph, and you would put away over $280,000 in that 40-year time frame. Now, the red line is assuming some growth on that investment, and it's assuming 8% per year. Now, if you think that sounds maybe a bit too steep, just think of it as possibly 6% only from appreciation and 2% from your dividends, and you can see that it grows to well over $1 million, which is not bad. However, if you didn't need those dividend payments and you took them and reinvested them all along the line, you'd be on the green line of this curve. You would have almost doubled that total nest egg of $1 million to just over $2 million. Now, I know a lot of you are thinking, I don't have a 40-year time frame, and maybe you don't. But this is that old adage of the earlier you start, the more time acts as your friend. And so back here in the VectorVest program, we are once again in the Viewers tab. And instead of looking at the stock viewer, we're looking down below at the watch list section, where we have several pre-built watch lists. And the ones we're looking at right here are handily titled drip watch lists. It's broken into 3 categories. We have 5 to 9 years. And this is a list of companies that have paid higher dividends for the past 5 to 9 years. And we have 164 currently in that list. Next, we can look at the 10 to 24 year list, which is just what it sounds like. These companies have paid higher dividends for the past 10 to 24 years, and there's 206 items for you to choose from there. And we have a third list titled 25 plus years. And these are companies that have paid higher dividends for 25 years or longer. And some of the companies we have in this list have been doing it for a whole lot longer than that. And you can see we have some very familiar names. Some of these are similar to what showed up in our search earlier using the high VST YSG. And looking at the dividend components, we have YSGs of above 1 across the board. All of them have good to excellent dividend growth, and the dividend safety ratings are all above 75, at least for the list that we're looking at here. Again, 105 different symbols to choose from can sometimes seem a bit daunting. So to close up tonight, I want to show you how you can build your own search looking at just one of these lists. And so for that, I'll move back to the Unisearch. And I have taken us to a folder called My Long Searches, which is just what I chose to build this custom search in. You can do it yourself at home. The first thing I did was choose a stock watch list that is equal to the 25 plus years. So under stocks, you would choose filter by and watch list. Under operator, choose equals. And when you click under value, it will pull up this list of all those watch lists we have from the viewers tab. And I put a check mark next to the 25 years. So now we're only looking at that original list of 106 stocks. Second, I chose a stock dividend analysis. I want to see that we have a YSG vector of greater than or equal to 1. And then just so this looks derby ready, I did put these other 2 parameters in there. One of them is that the stock price actual must be at least $1 to weed out penny stocks. I highly doubt you're going to find those in this 25-year list anyway. And then I did put a volume requirement on there that the 50-day moving average must be greater than or equal to 100,000 shares per day. And the default sort in the Unisearch is just to go to VST descending. So if I click Run Search on that right now, again, we're at about 1:56 p.m. We get a list of stocks down below. Some of those names you recognize from trading them, hearing about the companies, or maybe having seen them earlier tonight. And once again, you just get some really nice looking graphs when looking at the price performance and that earnings per share. And I'll go ahead and toggle on the dividends so you can see, once again, HP shows up, Bard, Pentair, there's Johnson & Johnson, UGI, and on down the list. So this is showing it as of right now, and as I'm sure what everybody's thinking is that's great, but how would that have helped me previously? So just as a test, I'm going to open up the date calendar and change us back to 1 year ago. We'll look on February 28th of 2013 and just run this same search that we just created. And we have a list of stocks. I'm only displaying the top 10. And let's see if 1 year ago you may have wanted to invest in some of these. CSL looks like they've had some trouble with their earnings, but the share price has certainly gone up for you. And you have been collecting the dividend of roughly 88 cents. You can see that over here in the graph control panel. It did locate HP for you even a year ago, and that's still showing up today. Sherwin-Williams, which over the long term has been a great stock, and you can see its dividend payments. There's Hormel, and we'll stop right there on Ben Franklin. Well, we've just shown you a few of the tools we like to use this evening. You now know how to get there, so start making your money work for you today so that it has ample time to do the heavy lifting. I will be hosting a live question and answer webcast on Monday, March the 3rd at 2 o'clock, and you can register for that at VectorVest.com/events. Again, to register for Monday's webcast, just go to VectorVest.com/events. You can find that right from our main webpage. And if you have questions about tonight's presentation, please call the telephone number on your screen. Thank you for joining us this week.